Hello, and thank you for joining us this evening. My name's Lisa Kay, Chief Member Officer at Brighter Super, and I'll be moderating tonight's Market Update webinar. We understand that recent market movements have raised some concerns for our members. Volatility can be unsettling, especially when it involves your retirement savings. So we've designed this webinar to help make sense of what's happening in markets right now and how it may affect your superannuation. We will also discuss what we're doing to manage risk and how we're supporting your long-term goals. We're joined by Mark Ryder, Chief Investment Officer, and Stephen O'Donoghue, Head of Advice, who will walk us through some key drivers behind the current market environment, discuss how our investments are structured to weather markets' ups and downs, and cover some practical steps that you can take or avoid to get through an uncertain period. During today's webinar, if you would like to enable closed captioning, the CC icon is located at the bottom of the video. We would like to encourage you to submit questions. You can do so by clicking on the live Q&A tab located on the right-hand side of the screen. At the end of the presentation, we'll get through as many questions as we can. And if we don't get to them all today, we'll come back to you in the coming days. Before we start today's presentation, Brighter Super acknowledges the traditional owners of the lands we meet on today. We pay our respects to elders past and present. We are proud to serve Queensland's 17 Indigenous councils, and we strive to provide positive outcomes for our members who identify as Aboriginal or Torres Strait Islander. I'd like to also let you know that this presentation contains general advice. It's been prepared without taking into account your individual objectives, financial situation or needs. Now, I'll hand over to Mark to provide a market and investment update.
Thanks, Lisa, and good evening, and thank you for joining our webinar today. I'll be discussing what's been happening in financial markets since the new US president was elected and how it has impacted your super. But first of all, I'll do a recap of how things currently stand. In recent weeks, we've seen a wave of tariffs imposed by the US on the rest of the world. On the 2nd of April, the US imposed a 10% base tariff. That's the current minimum. Australia is on a 10% tariff. In addition to that, the US also imposed further tariffs, so-called reciprocal tariffs, which can be seen in the table on my slide. However, last week, the US paused imposition of the reciprocal tariffs. For the next 90 days, all countries except China are back to a base rate of 10%. This is to allow negotiations to take place between the US government and countries around the world. However, Chinese tariffs currently stand at 145%. There are also a number of sector-specific tariffs which were imposed in the lead up to the 2nd of April, most notably on cars, steel and aluminium. Financial markets have been impacted by these developments. This chart shows the performance of the Australian share market and the US share market over the past year. The left-hand axis shows the percent change in the US S&P 500, the red line, and the ASX 300, the blue line. Since the 9th of April 2024, what it shows is that despite the recent weakness shown in share markets in reaction to the news on tariffs, both the US and Australia are positive over the past year. In the US, the weakness so far has only unwound the strength in anticipation and in the wake of the Republican victory in the presidential race last year. The most recent observations show the sharp rise in US and Australian share markets following a pause in tariffs and the opening of negotiations. On the 9th of April, the US share market rose 9.5%, reversing the sharp declines of the previous 4 days. Interest rates in the US government bond market have also been volatile. This chart shows a yield on a 10-year government bond yield, the benchmark interest rate for borrowing by the US government. interest rates rose late last year in line with the share market in anticipation of a strong US economy. But then, after retracing half of this recent rise, bond yields started to rise even when share markets fell. This was possibly a sign that some investors, maybe from overseas, were becoming concerned about their US investments and selling their bond holdings. The US dollar also began to fall at the same time. Some analysts suggest that this was the important change that drove a pause in the implementation of the reciprocal tariffs. The Australian dollar recently has fallen sharply, as is usually the case when share markets get the wobbles and the world seems a riskier place. But it has since reversed that sharp fall, as you can see in the chart, as the heat, at least for the moment, has come out of trade tensions for most of the world, at least for the next few months. And how has your super gone during this period? This chart shows the value of $10,000 invested in the My Super Fund a year ago. Since the recent peak, the My Super Fund has fallen by 5.2% in the period to April 11. It's still up 4.4% from its year earlier level, with the smoother ride versus the earlier share market chart showing the benefit of a diversified portfolio. The impact on other options is shown in the table to the right. As expected, the more defensive options, those that have less growth assets like shares, have had more modest declines, or none at all in the case of the secure option. Amongst all this short-term volatility, it's important to keep an eye on the longer run. This chart shows $10,000 invested 7 years ago. This perspective reveals the power of compounding returns as the My Super option, despite the recent 5% fall, is up over 52% from 7 years ago. That's a 6.2% annualised return, and after inflation return of 2.9%, in line with our long-run expectations. And the attractiveness of investing in a fund such as My Super, with around 3/4 of its assets in higher returning growth assets, is shown here. The My Super Fund, the blue line, has easily outstripped cash, which is the red line. Yes, there is more volatility, but the stronger returns over the long run compensate you for the risk. And when living through volatile times such as now, it's good to look back at history and learn lessons from the past. Last year, I had an article published on the Brighter Super website. It covers my experience over almost 40 years in financial markets and the various booms and busts in share markets I've seen. You can scan the QR code on the screen to read the article. This chart shows the US and Australian share market since 1980. The US is the red line, Australia is the blue. It illustrates that over the long run, share markets rise, reflecting that economies grow over the medium term, with company profits, employment and wages rising. Volatility in your super returns is a fact of life, but members need to keep in mind that the swings in the market can be both up and down. While everyone has their own personal situation that they must consider, history suggests that those with a longer run horizon are best served by keeping calm and staying the course on their investments. At Brighter Super, we have a range of super and pension options to suit our members. They range from more defensive investments, shown here in the yellow on the left, such as cash or the stable fund, or our somewhat higher risk diversified funds shown in blue, such as the My Super Fund, and finally to our higher risk, higher return options, which is shown in green. This chart shows the asset allocation for our My Super Fund. When we build our diversified investment options, such as My Super, we diversify assets across asset classes to help them navigate the wild swings we will inevitably see. For example, as you can see in this chart, a little over half of the option is made up of Australian and global shares, with the rest spread across assets ranging from cash to corporate debt to infrastructure. In the case of our more conservative funds, such as stable, the share allocation falls to 23%, with a much larger allocation to fixed income and cash. On the other hand, our growth option has 68% share allocation. These are designed for members with different levels of risk appetite. What's next? Firstly, the US will be entering a phase of negotiations with many countries on tariffs. There will be lots of noise about this, but the willingness to negotiate is a positive sign. And it's also important to realise that tariffs are only one element of the new administration's economic strategy. There is also policies supportive of growth, such as tax cuts, deregulation, and a desire for a weak US dollar. It's not a one-way street. We will keep you informed as the situation develops. So, in conclusion, with investing, volatility is a fact of life. That is why we diversify assets across a number of asset classes. Over the longer run, the trend is for positive returns. Remember, markets go up and down. Holding the course is a long-run strategy for building retirement savings. But everyone is different. If you have any concerns, speaking with our team is your next best step. Lisa, back to you.
So the key takeaway for our members is that markets do fluctuate, and this is why diversification is important. It's also worth remembering that superannuation is a long-term investment and long-run trends favour positive returns. However, we do understand that members may still be concerned or wondering about how this will impact their retirement. So with me tonight is Stephen O'Donoghue, our Head of Advice. Stephen can talk to us about the advice offerings available for members during these uncertain times. Stephen.
Thanks, Lisa, and good evening, everybody. Decisions made on short-term volatility can negatively impact retirement outcomes. Our advisors focus on your long-term goals and objectives, which for your retirement is how to make your money last so you don't outlive your superannuation balance. As you've seen tonight, volatility is part of any growth asset. However, over the long term, you can see based on history that these assets have outperformed cash. Whilst past performance is no guarantee of future performance, having a diversified portfolio including all asset classes that match your investment timeframe is where an advisor will help to ensure that these are aligned for you. Here at Brighter Super, we offer a range of advice options suited to individual member needs, and our 2024 Retirement Income Report, available on our website, found that members felt more prepared and confident after seeking information or guidance. Let me take you through some of our advice offerings at Brighter Super. If you have more general questions about your super, you can book in for a super health check, which is at no additional cost as it is included in your membership. If you are looking for specific advice about making contributions or investment strategies relating to your Brighter Super account, our intra-fund advice team can help. These appointments are also at no additional cost. And after the appointment, you'll receive a written statement of advice summarising our recommendations. We also offer several paid retirement financial advice options. So if you're wondering whether you're on track or how long your funds will last, a retirement health check may help you answer these questions. This service is with a financial advisor and completed over the phone at a cost of $330, which can be deducted from your super balance. We have scaled advice, which can help members retire with Brighter Super and covers particular topics such as implementing a pension or a transition to retirement account effectively, including choosing the right investment option for you. Our advisors also access potential Centrelink benefits, and this service costs $990 and can also be deducted from your super balance. Lastly, we offer a comprehensive advice service should you wish for a more holistic approach to your retirement planning. It is available for members and their partners and also includes the implementation of the advice. This cost will depend on the complexity of your advice, and part of this cost of this advice can be deducted from your super balance. So if any of these advice options are of interest to you, please complete and indicate this interest on the back of the digital feedback form at the end of this webinar. I'll now hand back to Lisa.
Thanks, Mark and Stephen. That was really informative. We'll now move on to question time, and I can see a few questions that have come through already. As mentioned earlier, if you would like to submit a question, please do so by clicking on the live Q&A tab located on the right-hand side of the screen. We hope to get through as many questions as we can, and if we can't, we'll come back to you in the coming days. To kick things off, we're going to start with a pre-submitted question from Anthony, which I'm going to direct to Mark. So Mark, is my super performance mainly attached to the ASX 200?
It really comes down to what option you're invested in. If you're invested in the Australian shares option, you'll find that yes, it will track very closely to the ASX 200. But what we do is build diversified portfolios where part of the allocation will be to shares, but it will also be an allocation to other assets. It could be overseas shares, but it can also be property, infrastructure, cash and bonds as well. So that diversification will actually make the correlation with just Australian shares somewhat weaker than you might think it is. So what it really comes down to is, yes, if you've got Australian shares in your portfolio, in your option, it will actually be contributing to the returns, but you've got to look more broadly about what else is in your portfolio, in your option, about how closely it actually does track it.
Great. Thanks so much, Mark. The next question's from Peter. How safe is my super and how volatile is the market?
If we go back in that chart I showed earlier when I did that back to 1980, you can see through that period of time and over the history, there have been some very volatile markets. So that is something which we work towards, building portfolios which can actually navigate that volatility. What's really important is building diversified portfolios, and diversified portfolios is all about taking different asset classes. It can be Australian shares, international shares, it can be having currency exposure in there by having overseas shares. The Australian dollar moves up and down as the economy improves or falls. It's got we have fixed income, we have different assets in there. What they're doing is at different times, at the same time, they're not doing the same thing. So what happens? It smooths out the ride. And so, we're very much aware, we were very much students of history about what has played out in terms of markets over time, and we actually attempt to build the best portfolio by getting real diversification that when some assets are doing poorly, other ones will do well. So markets are going to be volatile, they always have been, they will continue to be volatile, but our focus is to make sure that we actually do a great job to control that for you and to make your investments as solid as we can.
Right, thank you. So I'm staying with you, Mark. So from Chargen, how long does it take for superannuation fund to reflect the performance of the market? Specifically, there was an 11% up on the NASDAQ recently. How does that affect my super fund international shares option?
Right, okay. If you wake up on Thursday morning, you'll have seen that on Wednesday night while you were asleep. So it's a Wednesday trading, but it's happening in the US. If that was the case, what you'll actually find is that by the end of Thursday, you'll actually see it in your superannuation account. So by the time we actually get all what's happened in markets in our time zone and overseas, by the end of the day after, we'll actually have it showing in your super account.
Oh, perfect. So from Susan, what happens when we invest in cash? Is it fixed term deposits?
In terms of the option, if you invest in our cash option, the cash option, if you actually look behind what is there, it's an investment we make with ANZ Bank. It's not a term deposit. It's actually because we've got large amounts of cash, we can actually go to ANZ and get actually very good rates. So it's a cash option. We have cash also in our diversified funds, but they're different strategies. But you're in a cash option, it's actually really to deposit with ANZ Bank.
Okay. And again, from another member, have Brighter Super investment strategies become more conservative since Trump's election as the US president?
I think if we look over the last, probably few years, and the last year we've seen markets very strong across the board in the US. The so-called Magnificent Seven technology stocks, the market's been very strong. One of the things we've been very disciplined in doing, as the market's been rising, and we have particular targets in our funds that we're looking to maintain. If the US share market goes up a lot, it tends to actually become a larger part of the portfolio. We are very regularly rebalancing back to our target. So we're taking the profits from that rise and putting it elsewhere. So the first thing is, all the way along, we're very disciplined to actually effectively, as we were moving ahead, to actually book those winners. But if you look more recently, what we did following the strength into earlier this year, we actually did reduce our equity exposure somewhat on the basis of where we are in the investment cycle, and of course there is changes going on in the US as well. So I think we've got to be disciplined in the way we do it, and I think we've done that in terms of making sure that we have targets, we rebalance, and we really make the most of the gains that we've made.
So Sally's wondering if you think there's going to be a global recession sometime soon.
At the moment, look, it's still uncertain whether there will be a global recession. One of the things which makes it probably somewhat difficult to tell at the moment, of course, is just that the volatility we're getting in terms of decisions around tariffs, that they're on and then they're off. And now that does lead to uncertainty. But I think if we pull back and have a look before all this developed, it wasn't that long ago that the US economy was being talked about, that the exceptionalism, about how strong it was, how robust the economy was, and how great the technology in the US was. So given that's probably the greatest area of focus, I think at the moment it's too early to say if there's going to be a recession. But clearly the uncertainty which is out there at the moment doesn't help.
Thank you. Stephen, I'm going to direct a question from Robert to you. Should I put all of my super into cash at the moment?
Sure. Thanks, Robert, for your question. As you would have seen in Mark's slides, obviously over the long term, a diversified portfolio has outperformed cash. Now, whilst that may not reflect future performance, if your time frame is a longer term time frame, and you take your money and put it into cash, you don't take advantage of that potential upside. So what we would say is that you do crystallise that loss if there is a loss, and you do miss out on any potential upside. So we recommend that you align your investment time frame to your asset allocation, and that's where advice can help.
Thanks, Stephen. So would you also mind explaining, please, for Sunil, what is a transition to retirement?
Sure. So a transition to retirement is effectively transitioning to retirement, where you are able to, once you hit a certain age, being 60, is you can transition into retirement by being able to access your super a little bit earlier whilst you're still working. So it suits members that if they want to reduce hours of work, to get comfortable with the idea of working less, they have the ability to do that. Or if they're wanting to boost their income whilst working full time, they also have the ability to do that. So it's an in between working and retiring, and there's a lot of flexibility in that transition to retirement option. So as always, if you want further advice on that, make an appointment with one of our team and we can help you with that.
Great, thanks, Stephen. So back to you, Mark, from Robert. Does my super fund include gold assets?
We invest in share markets in Australia and around the world, and part of that, probably a larger part in Australia than elsewhere, is gold. So the way we're investing in gold exposures is actually through the companies. We don't actually have a specific gold allocation. When you look at the Australian market, the Australian share market, which if you were in the My Super Fund is 24% of the fund, 23% of that allocation is actually in the resources sector. So you're picking up exposure to commodities. It's more than just gold, but you'll get energy there, you'll get other commodities. And so our view is that we're not going to put a specific allocation to just one commodity in the fund, but we're picking that exposure up through the companies that we invest through the share portfolios.
Right, that makes sense. And from Dan, with the current situation, do the fund managers adjust the percentage of the asset allocation to counter the Trump effect to smooth out the impacts?
Probably goes back to the earlier question that I answered around that. What we're very focused on, and me and my team, is actually we have our strategic asset allocations, and we look to actually hit those targets. There'll be times when markets are booming, and we'll need to, as I mentioned earlier, that we're actually rebalancing. In the case of the US, which had been one of the major drivers of some of the returns in the more growthy funds, we're actually selling some of those shares, bringing it back. That discipline, if we didn't do anything, the allocations to US shares would have just gotten larger and larger. So that was that point there. The second point, just to mention again, was we did earlier this year make a distinct decrease in the allocation to shares.
Great, thank you. So from Victor, generally going forward, will Brighter Super be investing more in overseas shares rather than the ASX?
That will depend upon the opportunities which are there. At the moment, if we look at the allocation in our funds, that international shares are larger than Australian shares. But one of the things we're looking to do in our options is to actually try and reduce over time some of that volatility which is coming through from that international share exposure by going into other assets around the world and in Australia, into property and infrastructure. So we're looking to build a more robust portfolio, one which performs better and one which has got much more diversified exposure of assets, and that's a process we're working on right as we speak.
Thank you. So Stephanie's looking for a prediction from you, Mark. So let's see how you go here. What do you predict will happen after the 90 days when the pause on tariff is lifted?
Gosh, trying to pick what the US president's going to do. It wasn't that long ago when what was coming out of the US administration was that they weren't negotiating. We've moved to a situation now where they are negotiating and they've paused for 90 days. And I mentioned during my comments that I took that as a positive sign, that there was some flexibility there. So really, what happens after that 90 days is really going to come down to how successful those negotiations are. And at the moment, it does seem that there are a lot of countries who are going to the US looking to try and strike a deal. And where it's a case of that, trying to strike a deal is the US president's great capability, the art of the deal. I think what happens after will come down, do you get a resolution? And I think that's I don't have a perfectly clear crystal ball, but I must say I probably feel a bit more encouraged at the moment than I did a few weeks ago when it looked like there was just no negotiation. That was it, like it or lump it.
Great. So Mark, from Lorraine, are shares sold when they reach a specific percentage drop? And if so, what is the trigger to buy again?
In our share portfolios, we use great managers we have in Australia and international to do Australian international shares. Their approach is that when the share prices fall, that generally is a signal to actually go and buy more because it's cheaper. People generally like to buy something when it's cheaper, and that's the discipline which our managers actually have. It's more likely they're going to buy it. So you can look at it in the instance that if something goes wrong in an investment you've got, and it's performed worse than what you expected, yes, you might have a level where you say, look, I don't understand what's going on, I need to get out of it. But generally speaking, in these portfolios, and these are very experienced managers, and we pick the best managers we can domestically and around the world, when the price falls, their approach is actually to buy more because it's cheaper. And based upon, go back to those charts and the presentation about those longer run trends, that shares actually move up over time. It's that, and understanding the specifics for that company can give them that confidence to step in when prices are lower.
And Dave's interested in fixed interest bonds. Are they performing?
If we look at interest rates, probably so far this year, they've moved a bit lower. It's a bit more complicated in the shorter term. If you go back to my slide, I had one there of US 10-year government bond yields. You'll have noticed that there was quite a sharp pickup of about 0.5% in the last week or so, and that reflected, as I mentioned, some concern that maybe some investors are starting to pull money out of the bond market. So what we find is that bond market returns have probably been pretty flat. Strained bond market's done better. Yields have tended to trend down. International bonds, as indicated by US, have picked up a bit. So the returns have been, through this period, they've been flat to being modestly positive. But I suppose that diversification, so while they may have been flat, as a diversifier, that's in contrast to the decline we've had in shares over the last few weeks. So that's what we look for. Generally, we probably look for bonds to perform a little bit stronger, but there are times when that doesn't necessarily follow through.
Right. Derek's asked, with the affected financial markets, will the amount made annually for our funds be decreased compared to last year's profit?
When you look at whether you're in a pension accumulation fund, the returns of that are driven by the value of the investments you've got in there and the income that they generate. So in recent years, there's been very strong gains in a lot of our options. Some of the ones with higher growth have been returning around 10% or so. And that reflects a combination of share prices are moving higher, the value of some of the infrastructure companies we invest in have also moved higher, but there's also been income generated by that. At the moment, if you go look at the MySuper example I gave earlier, where the fund is down 5.2%, that's just reflecting at the moment that the price of shares has gone down. So that's going to be the real driver. So at the moment, there's no guaranteed return, and so at the moment I can't say precisely whether it's going to be up or down. But what's going to be driving it will be that combination of the price of the assets that we have and the income that they generate, and add that together, and that'll give you the return.
Right. And from Jamie, is overseas investment shares being reduced and more focus being placed on property?
At the moment, if we look at on international shares, one of the things I mentioned earlier that we had been selling some of international shares as they rose above the targets. We have been taking some of that money and putting it elsewhere in the portfolio, and some of that has actually been in property. And so yes, that we have been putting somewhat more into property, and we've been actually funding it by some of the gains through from international shares.
And our final question, again about gold, and this is coming from Peter, is gold part of Brighter Super's portfolios, all of our portfolios, and if not, why not?
As I spoke probably a little bit earlier, when it comes to that, we have gold in the portfolio through investments in the resource sector, Australia and overseas, but we actually don't make a specific allocation to gold as an asset class. And we're looking for more diversification than that. In Australia, 23% of the share market is resources, and you're getting the benefit of gold as well as other commodities and some of the benefits of that to actually provide returns and inflation and hedge during periods of inflation through that actual asset.
So thank you for your questions and for your time this evening. We value your feedback and would appreciate if you would complete the feedback survey from today's webinar. At the conclusion of the webinar, the survey will pop up on your screen within 30 seconds. It'll also include an opportunity for you to leave details should you wish to be contacted by one of the members of our team. If you submitted a question that we didn't get to today, one of our team will reach out to you as soon as possible. We hope that tonight's overview has provided some reassurance and guidance on what you can do to keep calm and stay invested. I'd like to thank you again for joining us online. So have a wonderful evening.